As the QE stimulus flows directly into the veins of the addict market, we see that real economic fundamentals are suffering. This is supposedly 10 years into an economic expansion. What an absolute failure! On one level, we could say that central banks and governments are desperate to prevent a collapse. That's certainly accurate on the surface level, but those who are willing to dig a layer deeper will know what's really going on. The entities which control governments, financial establishments, megacorporations, and elite establishments have their tentacles intertwined through it all. You came here for the truth, so let me unveil that for you. Today I have an interesting video. We're talking about what's happening in the markets. We're going to look at so many different charts here, and then I want to let you know what's happening with the average individual. That's what it comes down to. The PE ratio of a particular stock is really insignificant. What is important is your wallet, is your investments, is your savings, and the things that you're doing on a daily basis. I want to show you the stats. Let's get into it right away. China and the US had, quote, constructive discussions about phase one trade deal, according to the state media. And we see this on both sides. In fact, all the time. They have to do this because this propaganda allows the markets to go higher. That's in the US, that's in China, but also globally, because if they are not seeing eye to eye, then of course we have these tensions that continue to escalate and we have big problems. We experienced that for quite some time. Now what we are seeing is this constant, every week or sometimes more than every week, information coming out from either side, and chances are both sides, talking about how constructive the trade talks have been. Now we can't even agree to the fact that there will be $50 billion of an agricultural deal to be signed. They are always talking about some issue that's coming up, but don't worry, we're gonna sign it. It's gonna happen any day now. They pushed back the meetings, they pushed back everything, in fact, and at this point we don't have any real information. I did a post about this on my community or blog section just recently, if you haven't seen it, essentially stating that even CNBC and the Wall Street Journal are starting to see through this, but of course that will be pushed to the very back of the news. Nothing to see here. Northman Trader had a few things to say on his Twitter. I had a few of them that I thought were interesting to bring to you, and I wanted to show you them right now. Just two stocks, Microsoft and Apple, have a combined market cap larger than the Russell 2000 and the entire German stock market. This is crazy as far as I'm concerned. You could see it in the chart here. When you have literally two companies that are so massive, there is a massive concentration of wealth that has taken place on all different levels. Of course, with individuals that are considered to be rich and wealthy, they have most of the income, they have most of the earnings, they are getting most of the gains that we are seeing. And then you look at what's happening with the particular corporations. Fewer and fewer corporations are doing very well. Okay, you have a bunch of them that are able to get by. You have a few that are doing just absolutely incredible. Their market cap in this case here, $1 trillion. That's a massive company. And it seems like it will continue for quite some time as long as this QE introduction into the veins of every addict out there continues until something breaks. Here you can see Apple, they cut their guidance earlier this year and the stock has never been doing better. We're watching it go up and up and up and up, and all they had to do was basically lower the bar. This is what happens to these companies. They know how to play this game. They've seen all of these other corporations do it, and so they do the same. They have been buying back their shares at a ridiculously fast pace. We have watched the insiders as they come out, they sell little bits here and there, and we watch this company reaching new highs on the back of easy monetary policies. This is Apple compared to the US energy sector. If you can believe it or not, Apple is worth more than the US energy sector. Is that unbelievable? I mean, come on. We can see how these companies go up and down. The energy sector might take a hit at certain points if you have certain commodities that are doing very well at this moment, or at least there's price inflation there. That has an impact, of course. But just to see this and how much money has been put into this company, in particular with Apple, it is crazy to say the least. Walt Disney's market cap is bigger than the EU banks. I mean, to me, that's crazy. And I think it's actually the top 5 EU banks. But regardless, where all that concentration of wealth is has never been seen before. We're going into levels that are just absurd, looking at it from so many different angles. Northman Trader, the top 10% own 90% of the stocks. Fed cuts rates and adds massive liquidity. Stocks rally 30% as a result. The Fed, wealth inequality keeps widening and we just don't know why. Isn't it interesting when we see the Federal Reserve come out and talk about they don't think that this is a problem with inflation. It's less than 2%, so we're totally fine. Of course, we're not going to look one place or the other. We're going to look at the core PCE inflation rate and just keep our heads down. They're not looking at reality, and this is the result. Stock ownership has become more concentrated among the wealthy households, is what I talked about a moment ago. Looking at Goldman Sachs providing this information, household equity holdings by wealth level as a share of total household equity holdings, and you're looking at the bottom 50 on the left hand side, and it keeps going all the way. That top 10% clearly owns the majority of the shares compared to what we saw back in 1989. It wasn't necessarily the case, but now today we are watching more and more of the top individuals there taking more of a cut. The ratio of total market cap to US GDP, an interesting indicator to say the least, because it shows you not necessarily in a nominal value. What is the current stock market at? No, it is in comparison to the GDP. The GDP we know is manipulated. We know that the stock market's manipulated. We know that earnings are manipulated. But at least when you compare them together and you use a consistent indicator throughout a longer period of time, that gives you some level of comparison in order to manage this. And if you look at this chart, it shows you very clearly that we are at the highest levels we have seen, at least going back into the 70s. There's a clear overvaluation that's taking place right now today, particularly in the US markets. This is just comparing the total market cap and the US GDP. The green line is the GDP, and you can see that it slowly grows over time. However, the blue line, which is the Wilshire total market, so we're getting all of the US stocks instead of just looking at the NASDAQ or just looking at the S&P. Take a look at what has happened. You watch that fluctuation that takes place, and there's always an overvaluation, too much money flowing in, and it eventually reverts to the mean. But before it does that, it falls dramatically. Today, in this instance, we've seen it go well beyond the historical normal range, and this is unfortunate because that means in order to revert to the mean, the crisis, the crash, the collapse has to be much, much worse. And then we get into the important information today. While the US stock market is soaring to new record highs, farmers are having trouble paying their bills in the heart of America's agricultural sector. At the bottom of the page here, farm income fell in each state within the region from a year ago, and credit conditions in the Federal Reserve's 10th district deteriorated in the third quarter despite an increase in the price of certain commodities and additional government aid to farmers. A lot of money has flown towards the farmers, either coming through their insurance or coming through the bailouts, and at the same time, we have watched a lot of money has flown to the farmers, whether this comes in the form of the bailouts, whether this is from insurance, because of what has happened through the flooding and so on. Still, it doesn't matter because I believe 40% of the farmers today are struggling. Where is the money going? Well, of course, we saw in the previous instance, the big farms overwhelmingly got the money. This time, apparently, it's going to be different, but we'll see. This is just showing you a further breakdown of that in this Market Watch article. So far, $28 billion in farm assistance over the past 2 years. That's a big sum of money. There's no doubt about it. So now check this out. If you look at this particular stat, nationwide, U.S. farm bankruptcies in September surged 24% to their highest level since 2011. At the very bottom of the page, nearly 40% of the income that they have earned, some $33 billion in total, is related to the federal government's trade assistance assistance, disaster assistance, the farm bill subsidies, and insurance indemnities, and is yet to be fully received by farmers and ranchers. Add all of this up, it's not good any way you want to put it together. This article here is basically talking about the $50 billion in agriculture that China is supposedly going to buy. But in the second paragraph, you can see what's obvious, what I've talked about before. China has never confirmed this figure and has pushed back on committing to any fixed number, stating repeatedly that it would only buy in accordance with market conditions. So on one hand, we're hearing one thing, we're seeing that this is totally fantastic, everything is just great, but at the same time, they're saying, well, we're not going to buy 50 billion, we'll see what happens. China has never bought more than 25.9 billion from the United States, which it did in 2012. So we're talking about double the maximum they have ever bought before. And because of what's happening with the pigs in China right now, there is much less demand to buy that agriculture. Of course, because most of the agriculture that is planted, not just in China, not just in the US or anywhere around the world we see it, it's being used for the livestock. So you plant, I think it's like 70% of all of the plants are then fed to livestock. So if you don't have as much of the livestock, you don't need as much of the plants, and therefore that 50 billion number seems very unrealistic. And the last thing at the bottom, the crisis has driven soybean prices from $13 per bushel 2 years ago to just $9 today. So even if they bought the same amount they did before the trade issues happened, it's just not going to make the same dollar value. So this just looks very, very unlikely at this time, but of course, we'll see what happens. For years, pundits and policymakers have claimed that America's workers are doing better than ever. They point to low consumer prices, low unemployment, the availability of cheap credit, and even a booming stock market, and they discuss concerns about wage stagnation since Americans are buying more flat-screen TVs and cell phones than ever. If you want evidence of that, there's always a handful of individuals who mention this fact in the comments section, so if you want a good laugh, please check it out. But for my friends out there, you know what's really going on, and this article surprisingly actually touches on many points. But that doesn't account for what's happening in many cities and towns throughout the nation. Millions of Americans are subsisting on retail work in strip malls and shopping centers. They're earning hourly wages and they can't make ends meet, much less obtain financial security or robust healthcare. In the bottom paragraph, since 1990, the United States has been creating an overabundance of low-quality service jobs. In fact, 63% of the production and non-supervisory jobs created over the past 30 years have been in low-wage and low-hour positions. Read that again. 63% of these jobs are low-wage and low-hour positions. That's a marked contrast from the start of the 90s when almost half of these jobs were high-wage. What exactly do these low-hour, low-wage positions look like? They could be one of the almost 15 million non-management jobs in leisure and hospitality. These offer an average of 24.6 hours of work per week at $14.65 an hour. That's $360 a week. How does that sound? Not so good. Or they could be one of the 13.5 million retail jobs offering 30 hours a week at $16.73 an hour. That's $506 a week. And it goes on and on. There's a lot in here. And as far as I'm concerned, this is extremely important. Look at this. 100 million of these particular jobs, production and non-supervisory. That's 83% of all private sector jobs. And when you look at it, more than half of them, 58 million, pay less than the average weekly US wage of $793. Many don't have healthcare or other benefits. So we got a whole big difference in what we are seeing in the mainstream media, what we're being told, what the propaganda mouthpieces are always stating to everybody every day. And then on the other side, we have reality. You can believe whatever you want. I show you data that, as far as I'm concerned, is really important. I'm just glad you're watching, so thank you for that. That's all for this video. If you found it informative, smash the like button. Don't just press the like button. I want you to smash the like button. Thank you very much. If you want to learn how to make money online, then this is for you. I created an e-course that is free, unlike the others out there that cost as much as $5,000 in some cases, which is ridiculous, teaching you how to sell on Amazon. If you don't like Amazon, you could learn about e-commerce for free in this course. You don't have to do anything with it, just learn. TheAmazonGPS.com. If you want to learn about the financial establishment, how all of these corporations and governments and historically how all of this has been built up, these two books have everything that you need. I'm talking A to Z here. Check them out at the link in the description if you want the audiobook that's available at themoneygps.com. This video is taking off like a rocket. If you haven't seen it already, then definitely watch it. Click on it and I'll see you there.